Most people don't lose money in the stock market because they pick bad stocks. They lose money in the stock market because they're buying at the wrong time. The position goes against them, they panic, and they sell that position again at the wrong time, losing money. I trade the stock market for a living. And the biggest shift for me wasn't learning new strategies. It was building a simple system to make sure I'm confident that I'm buying good stocks at good levels. Today, I'm going to show you 3 simple ways to make sure you're buying good stocks at good levels. First item we're going to look at is moving averages. Now, I'm using TradingView. TradingView is an awesome. I have all my alerts, all my watch lists here. If you use TradingView and you want your charts to look like mine, check out the link in the comments below. I have a guide on how to make your chart look just like mine in terms of moving averages. I get a lot of feedback. People say, your lines don't look like my lines. So I created a free guide. Check it out in the comments if you need to make your charts look like mine. Let's look at Coca-Cola. Boring company, I know, but I think this is a really powerful example that will illustrate what I am talking to you about today. Coca-Cola, you can see, looks pretty range bound between 70 and 60. What would happen if you bought Coca-Cola every time it hit the blue line? The blue line is the 100 simple moving average. So what that means in plain English is the last 100 candles, which in this example are weeks, that's the average stock price of Coca-Cola. So if, for example, right now, Coca-Cola is trading at $70.55, the 100 simple moving average is at 66. That means Coca-Cola is overpriced if you're looking at the last 100 candles. This red line is the 200 simple moving average. So that's the last 200 weeks. We're talking the last several years of stock price averaged out. What would happen in 2024 and 2025 if you bought Coca-Cola off of the blue line? I went ahead and took the guesswork out of this for you. And I know this is hindsight, but it's still a really good example. If you bought it off of the blue line, initially you would be down. If you put your stop below the 200 moving average, you're like, hey, I need to make sure I don't lose too much money here. I mean, this is Coca-Cola. You could, in theory, not have stop losses for Coca-Cola if you had a long enough time frame. You could buy Coca-Cola off the blue line. You would be down for about 3 weeks, and then your position is going to come right back. All right, you get out. Where do you sell? You sell when you hit your profit target. You sell when you hit resistance. You're going to wait for Coca-Cola to hit the 100 simple moving average again. Look, it did it right here again. I'm not going to bore you, but it did it again. Moving averages are a great way to make sure you're buying stocks at the right level. Now, I also really like support and resistance. Let's talk about support and resistance in just plain English. Support is where a stock has bounced before. Let's look at a quick example. Today, I'm going to talk about Kroger. Yeah, the boring grocery store company. Now, for support and resistance, what I do is I build a watch list in TradingView. And for every stock on my watch list, I know what the company is, so it's a good company in my mind. You need your own determination of what makes a good company. I'll go in here and I will put horizontal lines everywhere I see support and resistance. Now, in plain English, support and resistance is just where a stock has bounced and reverses. Kroger has bounced several times in this area. We see bounce here, bounce here, bounce here. You can see like reversal here, see a reversal right off the moving averages, which is another bonus that we'll talk about when we put this all together. So what I do is I put these horizontal lines on my chart. And the reason I like the horizontal lines instead of just drawing small lines, support and resistance repeats over time. So if you set up this chart in 2022 and say, listen, I had some resistance here, had some resistance here, turned into support and bounced off of it, but then it came back down. So in 2022, this line at what is this, 42.63? You could have bought again in 2024 off of that same line. So draw horizontal lines on your charts. A lot of stocks respect support and resistance, and it's not some kind of hocus pocus magic. A lot of people say that the charts are magical, mystical. You have to really overthink it. You have to study it. You can make it as simple as you want and still be profitable. I'm living proof of this. I talk about it every single day in my Discord on MrMoneyMaxwell.com if you want to check that out. The support and resistance are great ways to make sure you're buying low and selling high. You want to buy at support. You don't want to be buying when a stock hits resistance like it did right here. Now, over here, right, resistance became support. This would be okay to buy here because you've had multiple pivots. You had a pivot here, pivot here, pivot here. You had a little Morningstar reversal here. We'll talk about Morningstar reversals at the end of this video. And then it started bouncing. If you want to buy low, don't be buying at resistance, buy at support. So where am I going to buy more Kroger? I'll tell you right now, I'm going to buy more Kroger right at $54. I have a 200 moving average. The last 200 weeks of price action is here, and I have support and resistance from 2022, 2023, 2024, 2025. Like, this is a great level to buy some more Kroger. Now, I've already added a little bit of my position here at the 100 because Kroger is at a good price level. It's pulled back from 65 to 60. I will be buying more at 55 based off of the moving average and the support and resistance from 2022, 23, and 24. I think another cool way to think about moving averages and support and resistance is to build pyramids based off of this. Let's just add another line. I purposefully did not add this line just yet because if you were to add a line on this chart, I have previous support and resistance. Where would you add some support and resistance here? Like for me, I see a pivot here, see a pivot here, 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 and here. So I would put this line here. I like to build pyramids. So if you want to learn how to dollar cost average, you can find 4 levels on the chart. You buy 10%, 20%, 30%, and 40%. A great place to buy some Uber would be here off of this previous support and resistance. Now, these lines are more like, I want you to think of them as boxes. They don't always hit the line and just bounce. If you buy 10% of your Uber position here, or you sell puts for each one of these levels, that's up to you depending on how many shares you can afford, you can build levels off of previous support and resistance. Do you see all the support and resistance that we have in here? We have, remember, support and resistance is just pivots. Just reversals. Look at all the reversals we see on the weekly chart right here around 69, 70. So buy some stock at 70. Buy some more stock at 60. Look, reversal, reversal. There's 4 reversals here in 2024. It doesn't mean the stock can't keep going down, but you would expect that it is going to have some other people buying off of these moving averages and these support and resistance. And a lot of times that's all it takes for enough people to get in. I do the same thing with boring dividend companies. Southern Company was my utility provider. I always build positions based off of previous support and resistance. I don't know if you can tell, but I have an alert set up on my chart. I'll never have to look at this chart again and know when I should be buying some more Southern Company, because when it hits 80.46, my alert will go off and I know that I should buy 10% of my position. I'll be buying another 20% right here at the previous resistance, which became support. I'll really be adding to my position when it comes into this much nicer support zone around 69. My last buy, the last time I will be buying Southern Company and holding on for as long as I need to, is going to be around $64, $65. And the reason is you can see these lines here. We had some previous reversals here, here, and here. Right on this line. Do you see how this line from 2020 is still valid in 2023, 2024? Now, the third way that I make sure I'm buying stocks at a good level is I use chart patterns. Now, there are 7 chart patterns I think every single trader needs to know. I have a free guide showing you my 7 favorite patterns. And I want to just show you a couple examples today of why I love these chart patterns. People are like, chart patterns are magical, mystical, they don't work. They don't work all the time, but let me ask you, what does work all the time? Look at this beautiful double bottom on NextEra Energy. I have it drawn out on the chart. I actually have the trade on here. We have a double bottom. It looks like a W, right? It resembles a W. And basically what happens is you have a pullback. The stock recovers, but then it retests again. So you have that double pullback. Double bottom, double pullback. That double pullback is like, hey, want to just make sure, is this stock going to bounce? When you see a double bottom, you enter right on the neckline retest. So we had a beautiful, this is just a classic double bottom. Any technical trader who looks at the charts would say, this is a great trade. I would take this trade. It's worth the risk to reward here. NextEra Energy took way off. You could have sold right at the 200 on that red line, the 200 moving average. Great target, great trade. Let's look at this real estate REIT. I think this is another really great example of hammer candles. I think almost everyone who gets into learning about technical analysis, learning about the charts, they learn about hammer candles. And you don't want to trade a hammer candle that's up high, right? This is kind of a semi-hammer. It doesn't look that great, but you want to look for hammer candles like this off of a moving average. This is a beautiful hammer candle. You could have set up a very simple, great risk to reward trade right here on the chart, and you could have made a nice profit. Where would your stop loss be? It's going to be at this previous reversals. You might want to go just a little bit under. And then I always make sure that from a risk to rewards perspective, I want to make sure that I have a nice profit target. So here's 1.6. I would just look for the blue line, the 100 simple moving average as my target. Now, is this trade always going to work? I don't know. No one does. But when you see a beautiful hammer candle down low, what that means is that lower wick means that the price went down there, people started buying. It's a great, great time to look at the charts, spend 5 minutes running through your watch list and looking for these 7 patterns. Again, I'm going to tell you, I put it together for you because it's my favorite 7 chart patterns. I'm keeping this as simple as I can. There are hundreds and hundreds of patterns out there for reversals. I'm just giving you the 7 that I've made the most money on. For our last stock, let's look at CMS Energy. Do you already see the chart pattern that I'm about to try to draw for you in a very crude manner? By no means am I an artist, but let me head over to the brush tool and show you. You see it? Nice double bottom, neckline retest. Why would you not hold on to the stock forever? Because, hey, it might come back down to your level again. So what we do is we wait for that neckline retest. We set up a long position. Right off the neckline retest. Where is our stop? Hey, it's below those last 2. You don't want a triple bottom. You don't want a quadruple bottom. You're looking for a double bottom. So you put in your risk. Where is your target going to be? Just the red line or even the blue line. Like if you set up the blue line, you're looking at 1.6 risk units. You can get a 2 risk unit trade out of this one just going through the red line, not even knowing if the price is going to hit. You can always move up your stop if the stock goes in the direction you want. This is a great example of how you could have sold here. And would you have been upset if it kept going up another couple of dollars? Maybe when you first start trading, you're like, oh, I could have made that extra $2. The traders who have been around for a while like me were like, hey, I got my profit target. I'm out. I am going to be looking at CMS Energy. What do you think I'm looking for here? I'm looking for another double bottom or a hammer or a pennant or a flag. So I would wait for this double bottom to form. The most expensive words in technical analysis is possible double bottom. Wait for the pattern to set up before you get in. What I'm talking about today makes sense to you. Make sure you follow me. I have plenty more videos coming where I'm talking about simple ways to build some passive stock strategies that actually work. I put together this free guide, my 7 favorite chart patterns that math-based traders, any trader can't afford to miss. These patterns have made me a lot of money, and I want you to see the same things that I see on my chart. You really don't need more indicators. You don't need more indicators. You just need a system to keep you calm and to make sure you have confidence in your trades. And that's what this video is meant to do. If you like this video, like, subscribe, do all the things that everyone asks you to do. And I'll see you next time right here.